Hi everyone, welcome back to the Property Finance Podcast, and today we're carrying on our frequently asked questions series. And one of the questions we always get asked is, when I'm going for development finance, what documentation am I looking to produce upfront in order to get the deal through? So I made a note on my phone of some of the key bits of information that you need to provide in order to get development finance. So first off, we're looking at planning and legal documentation. So obviously we want to see copies of planning permissions and consents. Now, it may be that at this point, you've only got outline planning. Obviously, we still need to see those documentations. It will be anything to do with the SIL payments. So that's your community infrastructure levy obligations and your Section 106 agreements. As well as that, you're going to want to see architect plans, drawings, so elevations, floor plans, etc. Also going to want to see title deeds and any leasehold agreements as well. So, for example, we have recently done quite a few leasehold developments. So this is where people are doing developments on a leasehold title as opposed to a freehold title. So again, we're going to need to see all copies of those as well. Land registry title plan and land registry title register as well. So both of those, because that will show any charges, any covenants, etc. That we need to be aware of. And then I just made a little note here of legal opinion. So this one's kind of a bit hit and miss. So you may, depending on the site that you're purchasing, you may decide, well, actually, I'm going to get my solicitor to just do a little report just to basically give a bit of opinion around the site, if there's any right of access issues, if there's any covenants that are going to be an issue, just to put kind of the lender's mind at ease sort of early on. So once we've done that, we then start to look at the development plans and the costings. So we're going to want to see a detailed schedule of work. So that's going to be the breakdown of your construction phases, timelines, materials, labour. We're also going to want to see a cost schedule as well. So this is essentially, you may see it on a Gantt chart, for example. So this is clear evidence of the projected costs at each phase of that development. So you may do it monthly, you may do it on certain phases, however the builder kind of works it, but realistically people would tend to have a monthly Gantt chart. So they'll say, right, in January we're going to do XYZ, in February we're going to do XYZ, and have it all neatly laid out like that. The other bit that we'll need is obviously any details with your professional team, so architects, surveyors, main contractors, project manager, all of those things. If you've got your own QS, obviously details of them as well. And then their copies of their indemnity insurance and obviously any warranties or anything that they've got in place as well. You may not be able to get those straight away up front, so they're not always necessary. But when I would say, when you're presenting your professional team, present it as a sort of proper pack, so a proper CV for each one. And then the last one that we want to see is the build warranty. So it might be an HBC, LABC, architect certificates, however you're planning on doing it. Again, they're not necessarily required up front, but maybe a quote for them would be handy. Then once we get through sort of providing that initial documentation, there's obviously going to be some more documentation that's going to be required. So valuation report, obviously lender's going to go and instruct that, but we need a valuation report before funds can be drawn down. A clear exit strategy drawn out as well. So it may be that if you're going to refinance the properties, we go and get an agreement in principle from a term lender, and then they essentially provide an AIP that can go over to prove that you can exit out. It may be that if you're selling, you might go and get some comparables from some of the local estate agents. Cash flow forecast, kind of covered under the Gantt chart, but it's maybe a little bit more detailed in terms of if there's any cash flow pinch points, how are they going to be covered. Proof of funds, so if you're putting money in yourself, obviously copies of your bank statements would be sufficient to show I'm putting X amount of money in myself, here's where it's from, here's where it's come from. Or if you're putting in investor money, then obviously a copy of the loan agreement is always helpful as well. And then your own CV as well, so developer track record is always helpful to have as well. Then once you've supplied things like proof of funds, etc., you're going to have to go through KYC and AML checks. So that's know your customer and anti-money laundering. So it's things like providing your passport, driving license, utility bill, providing copies of bank statements, that kind of thing. Then if you're borrowing through a limited company, now what I tend to find, I'm going to mention the documents, but to be fair, most people can just go on Companies House now and find them anyway. But it'd be things like your incorporation certificates, articles of association, detail of all of the directors and shareholders. But realistically, like I said, most people can go on Companies House and find all of those straight away anyway. If the company's been going for a little while, maybe your accounts as well and business bank statements. And then also your credit report as well. It is going to be key because obviously they're going to want to check that you've got clean credit. And you may need to do a company credit check as well. Then when it comes to insurance, you've got obviously your buildings insurance, which the lender's going to need to be noted on. Contractors, public liability and professional indemnity insurance, they should be able to show that relatively easily. Contractors all risk insurance is also a must. There's going to be 3 documents that the solicitors are focused on, and that's the legal charge, the debenture and the personal guarantee. So the legal charge is obviously the legal charge over the property, which gets registered at land registry and also at a company's house as well. The debenture, also registered at a company's house, that's your fixed and floating charge over the assets within the company. And then the personal guarantee, which obviously is signed by yourself and any other directors or any shareholders over 20%, which essentially then means that they are liable for the debt in the company. Then some of the other bits that you might need, things like environmental reports, structural or geotechnical surveys. Again, it's only really necessary if there's something specific on site that you need to be aware of. So any relevant licenses or agreements, so that could be, for instance, your party wall agreements, rights of way or access. It could be utility provider consents as well. So obviously you need to get those sorted. So just very quickly then to recap. So I'll just do a really quick whistle-stop tour of everything that you need to sort of put in place. So planning permission consents, architect plans and drawings, title deeds and leasehold agreements, land registry documentation, detailed schedule of works, cost schedule, professional team CV, build warranty, valuation report, exit strategy, cash flow forecast, proof of funds, developer track record, KYC and AML, company statutory documents, which obviously you can get through Company's House, accounts and tax returns, credit reports, buildings insurance, contractors public liability and contractors all risk, and then the legal charge, debenture, personal guarantees, environmental reports, structural surveys, and any licenses or agreements. So hopefully that's helpful. As you can see, development finance, you need a hell of a lot of information. But we mentioned on a previous podcast, obviously, about making it so that your deal is appealing to lenders. This is the sort of documentation that you want to be providing to get those development lenders fighting over your deals. So hopefully that's been handy. I'll post this list underneath the podcast as well, so you've got it. And then you'll be able to obviously look at it at any point and understand pretty quickly what it is that you need to put together. Hopefully you found that helpful. If you have, please share on social media. Let everyone know about the episode, because hopefully there'll be other people that will find this helpful as well. And please do leave a review as well while we've got momentum on the podcast. It'd be really great to see some reviews. And obviously we look through the reviews as well. So obviously if there's something that you want us to cover in the future, then please do let us know and we can do. But other than that, I'll catch you on the next one.